Good morning, everybody. This is Steve Everett again with Steve Everett Mortgage. The last time we got together a couple days ago, we talked about a VA Streamline loan, and I said at the time we were going to circle back and talk about an FHA Streamline loan. A lot of folks, when you buy a home, maybe especially first time home buyers or can be others as well, one of the biggest benefits in a purchase with FHA is you would only put down 3.5% down payment. If you're like me, when I first bought my first home back in the 90s, I didn't know what refinance meant. I had no idea. So I never really reviewed my mortgage statement when it came in the mail. So the first thing I want to encourage you to do is pay attention when your mortgage statement comes in the mail. Look at the terms on your statement. And then ask yourself the question, how does that mortgage fit into the overall finances of the home? Another way to verbiage that in your own mind is to ask yourself, what are your end goals? What's your ultimate goal as it pertains to your family today? Is it, man, money is so tight every month. I call it the ramen noodle food budget, where that's essentially all we can afford. And how does my mortgage assist in that? Or you may be one that says, my goal is I'm 35 years old and I want my house paid for by 50. Well, if you have 28 years left on the mortgage, the math doesn't work. Yes, I know the topic's FHA Streamline, but I'm going to circle back to that now. When you look at your mortgage statement on an FHA loan, and the same thing applies here that applied on the VA, if you have a very small balance on your mortgage, and your only end goal is to lower your monthly payment, probably doesn't make sense to refinance. What's a small balance? Typically $100,000 or less. But if you look at your mortgage statement and you have an FHA loan and it says you have $180,000 remaining principal, and I just made that number up, so fill in your scenario, $180,000 left in your balance to pay off, and you have an existing rate of 4.25. Does a refinance make sense? Yes. A streamlined FHA works similar to an FHA VA in that you don't have to verify income and you don't have to have an appraisal if you have the same borrowers on the new loan that are on your current loan today. If there's two of you on today's mortgage, both of you are going to be on the new mortgage, then those two stipulations apply. No income, no appraisal. Okay. One big difference. FHA will not allow you to include in the refinance closing costs or money to set up your new escrow. So on average, you'll need about $3,500 on average to close your loan. A much larger loan amount would have a little larger amount needed at close. And then again, after closing, you'll get part of that right back because you're going to get 1 month, at least 1 month, no mortgage payment, and you're going to get a refund from your old escrow sent to you in the mail of whatever's in your escrow. That's not up to the mortgage company. That should be reflected on your statement. Now, what can I do in a streamline loan? I can't take any money out. I can only refinance what I owe. If you have a second mortgage, can you include it? No. You can only refinance the FHA loan. The second mortgage you can subordinate if you want. Subordinate means request a second lender. If you have a home equity line, you can request with them, when we do all that for you, a subordination. Picture, if you will, standing in line at the water fountain and the person behind you taps on your shoulder and says, can I get in front of you? And if you let me get in front of you, I'll give you a cookie. Well, yeah, okay. Makes sense. It's what subordination is. It's when the second lender asks the first lender, can somebody take their place in front of you on the title? Well, the cookie you're giving them is a lower interest rate, lower payment, so you're improving the risk position of the second lien holder. And 99.9% of the time, they'll grant the subordination. Now, that doesn't apply to very many people. If there's one mortgage on your home today, and you're over 4.25%, you should reach out and investigate a streamline loan. Now, if you want to do cash out, consolidate debt, most people are not equity challenged today. That's not the scenario. The market values have been going up. So if you want to do a cash out, consolidate debt, streamline does not apply. This would apply is, does my income qualify? Is my equity good enough? None of those matter in a streamline loan. You just need a little bit of money at closing to cover cost and escrow setup on the new loan. Okay? It's impossible to answer every question regarding every scenario. This is to give you bullet points. I will say this, one added note. You have to have 12 months, no late payments on the mortgage to streamline, and you have to have a minimum credit score of a 640. Don't trust Credit Karma. It's not going to be accurate. We can help you with that with a soft pool to find out exactly where you're at and if this would make financial sense. If it doesn't make sense, we're not going to tell you to do something that we wouldn't do ourselves. Folks, I want to encourage you to comment on these videos. Let us know if you're learning something or if there is a topic you want us to discuss, you want me to discuss that may be applicable to you, or if you have a private question, email me at the email address below. We pick topics based on what we see. Coming soon, can I buy a house if my credit is 596 points? Can I buy a home in this scenario? These are topics that we see today where people truly need education. But let us know what your questions are, and maybe it will apply to a lot more folks, and we'll do a video on that and hopefully help a lot of people. Thank you all. God bless. We're here to help, and let us know what we can do to help you. Thank you, and have a wonderful Friday. Bye-bye.